Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Thursday morning. We've got a lot going on this morning in terms of data. We've already gotten about 30 minutes ago the final GDP number, which if you've been following this show, if you've been following the conversations we've had around, what is important from a macroeconomic perspective, believe it or not, we really don't care about GDP anymore. It's just not a big deal. You can see evidently so by the reaction at 8:30, which is just keeping the S&P in the same range it was before GDP. In fact, that's the morning on the 5-minute chart of the S&P futures. So no major reaction. And basically, why would that be the case? Why do we not really concern ourselves with GDP? Well, two things. One, in terms of what the Federal Reserve is going to do next, GDP is probably not a big factor. You might say, but Rog, what about recession? It really is not a factor because in terms of the traditional definition of what is a recession, that's just evaporated. And I think at this point, I really, this is an optimistic statement, but I think it's true. Most traders and investors are educated enough, I think, in some way, either due to time or just hopefully educating themselves like you all are doing, as they realize that GDP is such a backwards looking tool. And then recession definitions to sequential negative GDPs, that's also incredibly backwards looking. And we know things are slowing down far before an economist tells us. Tomorrow's PCE is a big deal. Today's new home sales at 10 a.m. could be a relatively big deal. Any kind of data that we get weekly, like the weekly initials claims, it's so incrementally delivered. There's usually not a shock. Shock could be non-farm payroll. Shock could be jolts. And then I guess the last thing, before we jump into the questions, and if you do have any questions, feel free to type them in. Let me know what you're looking at. Let me know if you're bullish or bearish. Please let me know what time frame you're looking at that symbol on. One of the things, I think I tweeted this morning, tweet, post, whatever they're called now. I'm a fan of sort of the cocktail party that is Twitter. It's always going to be Twitter to me, but I was thinking, I don't know, I just kind of rapid fire posted a few things. One was market crashes don't happen when the consensus is for a crash. Never that I can even remember, going back to the late 80s, has a crash happened when we all were talking about a crash happening. It just doesn't happen. And you might say, well, Rog, why doesn't that happen? Is that just dumb luck, anecdotal? Is that even true? Don't take my word for it. Go back and on the charts and look. Did significant moves of at least 10 to 20% happen when we were expecting them? No. And the reason is the very act of talking about the thing, whatever that may be, discounts the thing. It's priced in by the time the thing could happen if we're talking about it. If we're not, we've seen what happens when Powell should be pausing in Q4 of 2018 and instead hikes, right? We saw the quote unquote crash in Q1 of 2019. No one was talking about it. Again, it happened. The other thing is, please keep this in mind from a longer term perspective. One trader's crash is another trader's treasure. Look at those weekly time frames, get opportunistic. But I think this is the one that I was thinking about the most. Choppy markets make bulls and bears look smart at least once a week. So yesterday's sell-off, Wednesday, Tuesday's rally, or I should say Monday's rally. Are we going anywhere new? Right? Are we going anywhere where the trend is broken or is starting to organize? Are we going anywhere new? And that's just a big cup of nope. We're no longer in a downtrend, but because the downtrend is what was, we're in bearish shop. But for now, as you can see here with the low that we put in back on the 13th of March, if I think about this notion of what I call the sanity check, that was a 10% pullback. I mean, almost within a handful of points, that was a 10% pullback from all-time highs. And that's going to be oftentimes a spot where traders are going to say, gosh, something that I think about a lot, 18 months from now, am I going to deeply regret not buying most 10 and 20% pullbacks? And again, I can't think of a time where that was true. Again, 12, 18 months after the 10 or 20% pullback. So sometimes we have to step back a little bit and say, all right, where are we in the bigger picture? And I don't mean bigger picture macro alone, bigger picture in terms of daily chart alone, but where are we historically within bearish cycles, which frankly don't last that long. So there is a small window, gang. This isn't going to be likely something we're talking about 12 months from now. I think the most recent modern day bearish market lasted 9 months, and that might have been the '08. That was when the world literally almost stopped spinning. So when we think about the length of time that these sales are going to be in effect, it's not a very long time at all. So let's keep that in mind as well when we're being opportunistic, right? When we're looking for opportunity. Panic is basically the absence of a plan. Have a plan, and maybe it's going to be, Rog, I want to be nimble for a little while in this chop. Maybe it's day trading, maybe it's short-term swing trading. Rog, I know there's a portfolio that can be built in terms of position trades that I'm going to be pleased that I acted now in a year and a half. That time is also now. So if you're lacking a plan, come check out what we're doing in the Sector Secrets Mastery, and we'll give you lots of plans depending upon your time horizon, right? Okay, so thank you, Coach. I appreciate that. Always looking forward to learning from you. I'll tell you, this coach, and you could probably appreciate this. Every single year, I look back on the last 5 or 10, this will be 30 plus years. I've been doing this at this point. It's actually, it's been a lot of years. But the thing that I always am amazed by is there's always something new. You want to talk about keeping your brain active, what is it, neuroplasticity? The market is the ultimate brain activity because we're looking at math, we're looking at technology, we're looking at psychology, sociology, history. It's just an amazing thing to observe. And then if you get to participate in it, even better. If you get to profit from it, does it get better than that? All right, Eddie asks, CVS, long call. So again, the time frame is really important. CVS is in an uptrend. So again, let's normalize this, right? And hopefully folks have been hearing me say this. If I'm looking at CVS and knowing that I could be a day trader, swing trader, long-term swing trader, position trader, remember, there may not be an opportunity on one time frame, but there might be on another. And on the daily, Eddie, I would consider this, beautiful. Daily time frame. So the time horizon on this is maybe 2 to 10 days to expiration, somewhere within the framework of days to weeks in terms of follow through on a daily. And I think a buy the dip, when I see here, is a buy the dip, whether that be a volatility zone based dip or whether that be a mean reversion. You've got some really nice volume ledges sitting here. Yeah, good stuff on that one, Eddie. Beautiful trend, no doubt. Let's see. What about KHC on the daily? Beautiful. Thank you for the time frame. All right, KHC, Craft. Do I like the daily? Not at all, my friend. I do not like this chart on the daily. Why? Why do I like something? Is it arbitrary? Is it gut? It's none of those things. Does it have a trend? Is there clarity? And the more that there's trend and clarity, there's the probability of follow through. We get paid on follow through, gang. Fills start the game. Follow through is ultimately what pays us. And when I see something that's not got either a support level that it's likely to bounce off of, a resistance level that it's likely to be rejected from, or a trend that's the best probability of follow through, I'm going to leave it alone. So I'd say, not yet, maybe sometime soon, but probably the most important thing is to be open to putting something on a watch list, but keeping in mind there's not necessarily something to do. Now, let's say, like a lot of stocks are doing right now, let's say we're seeing a rally. For example, let's stick with KHC. So Heinz is rallying, and you say, well, Rog, I see what you're saying on the daily, but what about a 1 hour shorter term swing? Because the rally in a downtrend, I think a really good example of this might be something like an Apple. A rally in a downtrend, Apple's in a downtrend, but you can see here it's been moving higher within the context of the heaviness. Well, I'm not going to be able to get long puts or short Apple in this kind of structure. But as it's been climbing, there have been periods of time over the last, say, 10 days that Apple's exhibited an uptrend on the 1-hour chart. Maybe that's a day like Friday the 21st. And it kind of rallied off the daily price movement range. And those are going to be great adjustments to say, gosh, Rag, I see we're getting a downtrend bounce, but I don't want to necessarily pick a bottom, a downtrending bottom, but you don't have to. You can say that bounce might be an opportunity on a 1-hour time frame in terms of a very short time horizon, which probably makes sense. Do I want to bet on a longer term rally in something that is, for the most part, heading lower? Probably not. So the ability to be nimble and take advantage of, for example, the NASDAQ's been bouncing from the 11th of March. And frankly, every one of the almost every other time that we've gotten into the daily price movement range is either a winner or a loser, because frankly, we're going up to higher highs and higher lows. But where that downtrend or weak market bounce has been pretty good has been on a 1-hour chart, where the daily retracement, if you will, is actually in many times an uptrend on the 1-hour. Now, I don't want everyone starting to arbitrarily pick time frames either. This is something I talk about a lot. I'm not a fan of multiple time frame confirmation. There is no evidence when I look back on 30 years that if the 5 agrees to the 15 and the 15 agrees to the 60, the 60, you know where I'm going with this. All I've seen that it does most of the time is get me late into a trade because I'm waiting for too many things to line up. I'm waiting for a short-term slice of psychology to agree with a very, very long-term. And by the time all that happens, most of the move, if not the entire move, is done. So you might say, well, Rag, what are you doing then? If it's not multiple time frame confirmation, what is it? It's multiple time frame comparison. I think all of us could agree that each time frame represents a certain amount of psychology based on time. 5-minute, it's fleeting. It's a very short-term slice of psychology. How long am I going to hold a thought or an opinion for 5 minutes? And then now I'm getting 12 of those candles every hour. How long am I going to hold sentiment, opinion on a 1-hour time frame, right? It could change every couple of hours. Same thing with the daily, same thing with the weekly. So we know that we're taking a group of traders, investors, and their opinion, and then we're sort of putting it into or imposing this time frame, 1 hour, 5-minute, 4-hour, daily, weekly, monthly on top of it. Well, if I'm doing that, does a 5-minute sentiment or momentum or trend going to agree with a daily or a weekly? Probably not, because it's going to change throughout the day. And that's where I say, compare the time frames. Don't make them agree with one another. Compare them. If you're saying, Rag, I want to take advantage of that short term, great. Go to that time frame, use that short-term nimbleness to your advantage. A lot of other traders are saying, Rag, I don't want to get thrown into this mosh pit, because that's kind of what this feels like. I don't want to be in the mosh pit. Great. Go out to a weekly time frame where those short-term shifts in sentiment, which seem to be happening constantly, heck, even on the daily, they're happening a lot. It's absorbed in the overall ranges that a weekly candle is very used to dealing with. And so that's where a lot of traders will say, depending on my objective, pick the time frame. Don't look at all of them. And here's probably the biggest reason not to do that. When we're in a position, are we really great at humans in terms of asking ourselves, are we right? Or are we looking for things that are agreeing with us? That's okay. It's part of being human. Most of the time, multiple time frame confirmation is basically which time frame agrees with the position that I have on, right? And that's where traders get into a lot of trouble. Well, I know this was a 5-minute day trade, but gosh, the hourly chart's still in an uptrend. Oh, I know this was a short-term swing, but gosh, that daily time frames, do you see where the slippery slope is? And then it brings us back to that old joke. What's an investment? It's a trade gone bad. Right? Well, I know the trade is no longer good, but I really want it to be in this stock. It's an investment. And while that's not always true, sadly, it's probably true more often than not. All right. So that's kind of where I would look at where we are right now in terms of opportunity. And, there's a natural bullish drift to the equities if given enough time. And that's why I say some of the longer term stuff is really probably for a lot of traders with a longer term time horizon, for some newer position traders, quote unquote investors, this might be your first 10 or 20% pullback that you're dealing with en masse, where so many things are, as I would say, on sale. So that was KHC. We've taken a look at CVS. And one thing about CVS, and this is going to be something unique to healthcare, is it does sometimes behave a little bit like a defensive. So be careful. There are going to be some days where stocks within the XLV are rallying with the Dow and with the S&P. And there are going to be other days where healthcare is acting like a defensive, looking a lot like XLU or XLP, where traders will say, well, there's weakness in the broader averages. Let's go somewhere safe, right? People will always need toilet paper. People will always need the power on. And yes, people will always need, medical care and different medical needs. And that's where healthcare can be an odd sector where, yes, it's heavily weighted in the Dow and S&P, but it does tend to behave from time to time as a defensive. All right. Next question is KIE. So this is the insurance sector, and it does tend to track very often with financials, which have been actually, again, longer term, pretty darn strong. Longer term meaning look at the weekly time frame, position trading. In terms of KIE, it's been really strong. And if I'm going to look for a pullback on KIE, it is trying to wobble out of its trend. That said, we have a pretty good volume ledge sitting at about 59. Point of control going back to last October is at 58.5. Now, what about for this year specifically? Where is the attention? Actually, not that much different. I would say if we're looking at KIE, Dave, maybe crack it open and see where individual stocks might be behaving in a way better than the broader group. So this is sort of that boats and tide comparison. So the boats would be the individual stocks. The tide would be the sector in this case. So if the tide is bullish, is there a stock within the KIE? Take a look at the top, I'd say, 5 to 10 top holdings. Focus on those high concentration weighted names and see if maybe something may not be behaving in a way that's more bullish than the KIE. The way that I do this is with something it's a flexible grid on Thinkorswim. I just call it the Flexi Grid, and it gives me a multiple chart view. And I try to set up a lot of these sectors that I'm interested in too. So if I crack open the KIE, by crack open, I mean, okay, what's inside of it in the order of weighting? And you can see there's a couple stocks that are moving higher. Now, whether or not those stocks you want to go at the option level or the shares, that's a different story. But I would say, maybe go hone in on those names that have the uptrend that are behaving in a way better than KIE itself. And that's the way I would do it. Just crack that open and look at it that way. All right. Looks like last question of the morning. Coach asks, I'm new, about a week or so. How can I learn to trade options, place stops, etc.? Coach, I could say the obvious thing, which is come join us in the Sector Secrets Mastery. But here's what I'll also mention. Every single day, me and a whole host of other traders here at Simpler put out free content, whether it be a show like this, Charts and Coffee, or different content on YouTube. Check that out. For basics, I'll tell you, Coach, as much as I'd love for you to join us in the Mastery where we cover those things, YouTube's amazing. If you go into YouTube and say, how do I place a stop? I would even say pick a brokerage, right? Find a brokerage you're going to use and then learn how to place a stop on their platform. And a lot of times those brokerages have a lot of great, very, very basic videos on here's how you place a stop. I think the most important thing now when it gets into the tactical side of things, when do I place a stop, right? How would I use a stop? How would I use a limit order? Do I ever really want to use market orders, or one cancels the other orders, or if then? So the really basic sort of definition type education, coach, I'll tell you, save you some money. You can go online and find that basic level stuff. What is a stop loss and what is it used for? But then when you're ready to start tactically applying it, yeah, I would say come on over, join us in the mastery, and take advantage of a lot of the free videos that we put out here at the Simpler Trading YouTube channel. I have content over at my YouTube channel at Raghee Horner as well. And then when you're ready to hit the ground running, come check out the Sector Secrets Mastery. All right, gang, be good to each other. I'll talk with you soon.